Good morning once again, and welcome to the Haven Financial Group. Hope your Sunday morning's going well. If anything you're hearing today resonates or brings other questions, worries, concerns, reservations, feel free to give us a call, 612-504-8400, havenfinancialgroup.com. Check out our classes on our website. We have some really good ones, Kim, at our education center, our still new education center. In addition to community education, we have some at our office. They usually book up. There's usually waiting lists. I'll give you an example. Here on April 13th, Maximize Social Security, one that we teach often. Then we have one May 7th, Wine, Cheese, and Retirement Ease. I mean, who wouldn't want to come to that one? Seriously. April 5th, I see Medicare Made Simple. Glenn Ramey, who was on last week. You know, if anybody can make it simple, it's Glenn Ramey. Very important. And here's Tuesday, May 19th. And you can find all these on our website. May 19th, Advanced RMD Planning for those 73 plus. Mm-hmm. RMDs, there's a lot of confusion. There's been changes. Yeah. Come to the class. And then another one. Maybe you're expecting an inheritance in the near future. I wouldn't rely on that as your plan, but there are people that get inheritances, and we want to make sure that we handle that properly. Wednesday, May 13th, here at the Education Center, Inherited RMDs and how to go about that. These, amongst many others, again, wills and trusts I'm doing with provision law here coming up. Education is so very important. And again, I already said it on today's show. It's where you should start the process is by those that are educating, not your internet, not your uncle or family member or the water cooler mentality. Start with a class and keep taking classes, because guess what? We can always learn. I don't care what age we are.
Well, and all of these components are constantly changing. And it's hard to stay on top of that. So taking these classes just keeps you updated, keeps you fresh, gives you an opportunity to look through what you've got planned and what you're doing and see if maybe you need some help changing things. Larry, every time I look up, the tax code has changed, in some way, shape, or form, right? And you've said so many times, ages and dates, they're all changing constantly.
Yeah, just when you figure things out, guess what? They're going to change it again. The tax code changes. Lance Larson, our CPA, I'll be bringing on another CPA. And Medicare, just when you figure that out, the insurance companies change things on a whim. We encourage our existing clients, those that are listening, the public, friends, family, anybody. And that's why our classes stay very, very full. And again, word travels. If we're giving back to the community the education that they can make decisions, many of them are not getting that where they're currently at. In fact, I always stress in my workshops, are you getting this valuable retirement information with who you're currently working with? Mm-hmm. And sometimes people feel guilty. They go, I feel, I maybe shouldn't be here because my advisor probably wouldn't be happy. Well, you're there for a reason, and it must be because they're not answering the questions.
Absolutely.
So, again, who are you working with? Who's your partner? Are you getting the attention? And if you're listening today and you're not, we would love just to have a conversation.
Let's talk a little bit about emergency funds and replenishing those emergency funds. Now, you stated in the first segment of the show today how important you think that it is to have cash on hand. Talk a little bit about how much cash you mean when we're talking about a percentage of your overall portfolio and why you think it's so important.
Yeah, you've heard me mention the emergency fund, having good liquidity, stock market investments, and principal protected investments. So let's talk about the liquidity of the emergency fund. This is just a benchmark. And again, sometimes benchmarks scare people. A benchmark for somebody that's in their mid-60s to 70 in that area range, for a retired couple, we like to see 50 to 100 grand liquid. I can tell you that's going to scare some listeners. Oh, 50 to 100 grand. Why would Larry say that? Because you need options. There's right now the markets are down. Things come up. The furnace goes out. The grandkids have a birthday party. Whatever it is, you need that to fall back on. And at the end of the day, most do not have enough going into retirement liquid, and they have everything at risk in the market. And that's not a good recipe to go into retirement. So guess what? It's tax season. It's tax time. We're seeing with the big, beautiful bill and other tax changes, we're seeing a lot of folks get some bigger refunds this year. Bigger refunds make some people happy. I see a lot of happy people leaving Lance's office. But maybe that's a good time to replenish that emergency fund. Maybe you got an unexpected bonus, a windfall at work. Maybe that's a good option to fill that thing back up.
Mhm.
Maybe you did. Maybe you did get an inheritance of some sort. Maybe that's a good way to get it back. We want to maintain good liquidity. We don't want to diminish it. We want to replenish it. And again, 50 to 100 grand is just a benchmark. Maybe it's a goal that you're going to seek after. If all I did was plant a seed, well, guess what? The show was a success.
Hmm. And what about the idea of replenishing? I mean, that seems a little more difficult to me because if you are not bringing in a steady income and you have to use a portion of that emergency fund, that's not such an easy thing to do to replenish it. How do you suggest to your clients doing that?
Well, maybe it's adjusting your savings a little bit, and which can increase income. I'd be a little, sometimes that means taking more risk, and I'd be very cautious, especially with the age group that we serve, but it may be part of your plan to increase your emergency fund. As I mentioned, the refunds, inheritance, all those various things. And one that actually my wife, Rochelle, is very good at it and annually is negotiating some of these monthly expenses. There's so many streaming things on TV nowadays. It's like I look at my charges monthly and I'm like, oh my gosh. Well, maybe you can cut some of those out. Maybe you go to your cell phone bill or the utilities and see if you're getting the best deal possible. You actually might be surprised. Or insurance. I mean, insurance is through the roof. Maybe you go to your insurance carrier, shop it out every year, and maybe there's some savings to be had. Maybe it's that cell phone bill that you haven't looked at and you just keep paying the bill and the bill they keep getting bigger and bigger. And maybe another service provider wants you more. So maybe there's expenses that could be cut in a variety of these areas. And let's not rule this out, Kim. And as you retire, that doesn't necessarily mean you're not going to do anything. Maybe part-time work is an option. Hopefully not because you have to, but you have to have some sort of purpose. So freelancing, consulting are some that I see quite often. And maybe that little additional income, maybe that'll help you replenish that savings account. So there's a variety of ways to do it. It's just the
Sure.
means that you're able to do it.
Absolutely. I love that idea of maybe selling off some assets that it's just not needed anymore.
Well, let's face it. We all build up a lot of extra junk. If maybe I shouldn't call it junk, but it may be junk, and maybe your junk is worth
I usually
something
call
to
it
somebody
junk.
else. Yeah, me too. Maybe somebody else that maybe it's their treasure. So
Yeah.
maybe unloading some of that that you don't need, maybe that could free up a little extra. So
Mhm.
first of all, look at all the options. Maybe it's downsizing. Real estate right now is a little difficult. So replacing what you have isn't always easy, especially as we hear a lot of folks that want one level living. That's real estate is a different topic these days, but just looking at the options, maybe that in itself can get that savings back where you want it.
Sure, absolutely. 612-504-8400 is the number. That's how you reach the folks at Haven Financial Group. Maybe you have a plan and you don't like the way that it's going. Maybe you are in your mid to late 50s and you're starting to look out and you're recognizing the fact that, wow, retirement is coming. I can actually see it down the road. It's been a long road and I can see it, and I need to start to put together a plan. Or maybe you just have some questions that you need answered. Give the folks at Haven Financial Group a call. Go in, free consultation, sit down, have some wonderful coffee and some great cookies. Tell them what you're looking for. Tell them what you're hoping for. And let's find out if you're a perfect fit for them and vice versa, if they are a great fit for you. 612-504-8400 is the number. Just let them know that you heard us here on the radio. When we come back, let's talk, Larry, a little bit about pitfalls to avoid after you retire. Again, the theme today is once you've retired, you really want to be in a position where you can stay retired. We've talked a bit about emergency funds. We've talked about income in the mailbox, and we want to talk about pitfalls and avoiding those. This is the Haven Financial Group Radio Show.